a lot of times when we talk about corporation as corporation election, it is not just about how to get that done. It's so simple, right? And you can just decide you want to do it, and then your accountant can do it for you right away, or you can be more hands-on and go find the form 2553 and get that elected. But so much going behind it. So this webinar is really it is me trying to summarize all of the knowledge around this topic through the 20 some years practice. So it is very selective in the place where I want to bring to your attention, but it is really the place that we come across with our clients. If I don't say that daily, and maybe among 30 some of us, it is a daily question, but it is a very often asked by our client. So it is a good time spent, I promise you, to stick around and get your knowledge updated. And no responsibility disclaimer. It is our corporate lawyers and made sure this is one of the biggest slides we have in our presentation. So it is really not about we say that we don't care what we're talking about. It is really about a way to say to you that be responsible for what you learn from the internet. Obviously, we're on the internet. And do you know we are real? And if you are from out of state, you don't know us, and check us out on the website. Give us a call to make sure we really exist. You don't want to work with a company that you think is so great. The advertising is super good. Then when you call, there was never a person there. Or when you're trying to get a hold of them, or after you pay the $3,000, they just disappear. I at least have 3 people I knew in person for the past 27 years practice, and I had paid money to a 1-800 number to resolve their tax issues. Nothing was done. After the money is paid, they literally disappear. The 1-800 number doesn't even exist anymore. So that is the responsibility. That is what I'm talking about. Now, what is S-Corp? Okay, let's just get down. This is a definition from IRS. You see, I do go to IRS to get these kind of definition because that is the best way to get the most authoritative answers on things. You don't want to Google some unknown places, get an answer, then tell IRS that, well, I got my answer from here. It is not authoritative. You need to rely on companies like Community CPA, government agencies like IRS, DOL, all of SBA, all of these agency websites is really where the university is really at if you want to be a good student. So S corporation is a corporation. That is number one thing, is a corporation. And that elects to pass corporation income, losses, deductions, credit through to their shareholder for federal tax purposes. Okay, so normally when you are a corporation, you can imagine that is it is an entity on its own, like a C-Corp, right? A C-Corp pays taxes on its own, but S-Corp doesn't because it passes through. It doesn't pay taxes, but pay taxes on the shareholder's personal tax return. That's why the word pass through is used. It just is not holding anything. If you imagine S corporation as a basket, it is a basket without bottom. It is a basket that goes through. So you can make money, you can do all kind of things under S corporation structure, but when at the end of the year, when you make money or lose money, that dollar amount does not stay in S corp but pass on to 1040. Shareholders of S corp report flow through income and losses on their personal return. That's what I was just saying. Are assessed taxes at their individual tax rate. So in our tax system, there's many different tax rates. Okay, so you have individual tax rate, you have corporation tax rate. Then when you come to different tax components, for example, income tax, capital gain tax, long-term, short-term, and excess taxes, the label of taxes would give you a different rate, different table of tax rate. So what it says here is that whatever individual pays, Individual tax rate is what applies to S-Corp, not corporation tax rate. Remember, corporation tax rate was lowered to 21% in 2018 by President Trump and that Job Act reform. And now we're at the place where the new President Biden, not new anymore, but I mean President Biden hasn't done tax reform yet because he had a budget proposal come up, and if I remember right, it was $8 trillion too much. Then the cash we have in our pocket. So then there goes your tax reform, right? We have to do things on our taxes to come up with that $9 trillion, $8 trillion that we needed. So that tax reform might be overturning that 21% of the corporation tax rate. So we are still wait and see, right? We will know that very soon if they don't shut down. But here, what it says is the pass-through will go for individual rate is not corporation tax rate. This allows S corporation to avoid double taxation of corporation income. So double taxation is a very famous term, and we have our client would come in and goes, I don't want to be C corp. It will be double tax, and I want to avoid double taxation. So-called double taxation are these two taxes. They don't want to double. Number one is income tax. In the C corporation, you pay income tax on the C corp, right? If you are a shareholder of the C corp and you suddenly would, you got too much money in the C corp, you would distribute to yourself because you're a shareholder. That dividend has to pay dividend tax. That's the tax they're talking about, double taxation. Okay, so some people confused with that double taxation means income tax and self-employment tax. Sure, we all pay double taxation on the personal side. If you run your business, you somehow has to be double taxed. And I'll explain that to you why that is the case and very soon. But here I want you to know that it is, yes, it did avoid double taxation, but double taxation compared to C Corp, compared to income tax versus dividend tax. All right. So let's see. Qualification to be S Corp. Sure, you go, that sounds great. And everybody ran as S corporation. So without knowing why and how, and I just want to be S corporation. So that's what we call fashion, right? In business and in life, there are just things that we do is fashionable. And there are people getting into S Corp is not because the business nature requires to be S Corp. They don't even know why they S Corp, but they just follow the fashion. So they're here, they're S Corp. Let me tell you the qualification at S Corp. So maybe that will make you more alert when you get into situation, whether you have S Corp or you have other entities. To qualify for S Corp status, the corporation must meet the following requirements. Be a domestic corporation. And that's such a big word. What is domestic corporation? I actually put a definition here for you. A corporation incorporated and operating in U.S. would be considered a domestic corporation. And if you are incorporated and operating in U.S., you are domestic corporation. When you talk to the state government folks, they're saying that it has to be a domestic company for us. For us, for the state means that you are incorporated in the state and you are operating in the state. And if not, you are a foreign corporation. So don't get hung up with whether this is the federal government talking to you or state government talking to you. Just know that domestic corporation just simply means it is formed and operating in the same place. Okay, so number one, as an S corporation, you have to be like that. Okay, and have only allowable shareholders. So what is allowable shareholder? And remember, the S corporation shareholder has to be in general. I'm making it general because most of my clients are small businesses. So I'm not talking about huge corporations with certain trusts and estate are part of the S corporation shareholder. It happens if a shareholder dies and then that social security number is replaced by trust and estate. Okay. We don't talk about those extreme or different rare situations. let's just say S corporation shareholders are people with arms and legs and are walking on earth. Okay, not only walking on earth, they also has to be U.S. citizen or residents of U.S. in order them to have this S corporation status. So see, those are what we call allowable shareholders, right? Cannot be a partnership, cannot be a corporation, and it cannot be a non-resident alien shareholders. Like you go, oh, I have an S corporation here in U.S. because I formed the S corporation here in US and I'm running the business here, but my shareholder is a company in China. No, then you don't qualify to be S corporation. And also, the S corporation don't allow you to have more than 100 shareholders. I had a taxpayer come around and goes, well, Ying, you're wrong. It's not 100, it's 74. And I don't know where the 74 come from. Actually, I hear two people talking to me like that. So again, we go on to IRS website to take information from that authoritative website. So whatever other people say, they can say 7, they can say 16. It doesn't really matter. IRS website says 100. So let's go with the 100. Okay. So no more than 100 shareholders and only one class of shares, one class of stock. What does that mean? In C corporation setting, you could have a different tier, different kind of shareholders. Their shareholders are common shareholders. Their shareholders prefer shareholders, so they don't vote and they have no voting right. But in S corporation, everybody is the same. And if you hear my webinars from before, and for so many years at our firm, we refer S corporation, not subchapter S. No, we refer S corporation as a socialism corporation. And we say that has a really accurate spirit of S corporation operating guidelines that what IRS is imposing. So as a socialism corporation, the way we understand socialism definition are equal, right? Equal, no bosses, no employees, and everybody equal. And in S corporation is a one class of stock. So if you have an S corporation and you invite other people to be shareholder, you can't be saying that, well, because I invite you to come in, so I make decisions and I have voting right, you don't. You cannot do that. The only way you can make decision to your benefit is because you are majority shareholder. So obviously 51% is more than 49%. You can make a decision against the other person, but the nature of the stock, no difference. So they are one class of stock. So now you kind of get a feel of, okay, in order to do a S corporation, these are the things that I need to know. I need to know that it is a limitation or it is an advantage for me. And I will further explain to you about this socialism corporation concept. And the C corporation, we use the C as to say is a capitalism corporation. That's how we define the two our way. I told you that you take my word with a grain of salt, right? Don't take that as authoritative statement. I'm just trying to help you understand the nature of the corporation. And I personally don't have any preference, but socialism corporation definitely has elements where benefits are shared. If you want to get a benefit for the shareholders of S corporation, all of your qualifying employees will get the same. And they are company owners just want that. They want everything to be shared. They want to grow the company with the employee. So they're also company owners are more self-focused, don't want this, don't want that, because the employee will get it. And no right or wrong, and it's the stage of your business. When you are just starting, while you are struggling for cash flow, how could you be given? How you don't have it, you can't give, right? So it is not about the business owners, good or bad, and or neutral. It is really about the business stage that business owner is in, or the life stage that business owner is in. Has a lot of philosophy behind it. But it is true. It is not no right or wrong. Everybody is doing right because we all try to create wealth and feed the next generation, go on with life, right? That small business owner are good with that. How is that corporation tax? 3 steps. Number 1, the corporation files business tax return. That is called 1120S. Okay, and you file business tax return, which is due on March 15, and extended due date is September 15. After you do that, then each shareholder will take their proportion of profit and loss into the K1. So K1, how many shareholders you have, the maximum is 100. So the most of the K1 you can create is K1 for 100 of them. And then you give that K1 to each of the shareholder. The third step is each shareholder is reporting that on Schedule E on their 1040. Make sense? So it's 3 steps. That's how S corporation being taxed. All right. So now we want to talk about, okay, now you know that S corporation being taxed on the 1040, not on 1120S. You file the return, you get the K1, then you go to your tax preparer, goes, here's my K1, here's my W2, here's my mortgage interest expense, and do my 1040, right? So what kind of tax impact it has on 1040? So the owner of S corporation pay regular income tax on their distribution. So inside of S corporation, you would get money from S corporation just 3 ways. Just 3 ways. Okay? And hear me. If you have S corporation, you're sitting there going, I don't know how to get money out of my S corporation, and you're wrong. You know how, and you're already doing it. And there are 3 ways of doing it. Number 1, you have the reasonable paycheck for yourself, right? So that's one way to get money out of your corporation. Second, you reimburse yourself for the expenses that you spend for the company. That is not taxable, right? For example, if the company need a toilet paper and you bought it, you use your personal credit card, pay for it, then you go get reimbursed by the company. So company will document that as a company expense. You got a check for $5, that's not taxable because it's reimbursement. That's the second way to get money out of S corporation. As a business owner, the only benefit is that nobody's gonna charge you for what you take as a reimbursement other than IRS. IRS can come around, audit you, goes, why do you need toilet paper? You know, I never see you go to toilet, go to bathroom during the day. You work so hard, you never go to bathroom, so deny. Well, they could do that, okay? So that's the only way for that non-taxable benefit, I wouldn't call benefit, non-taxable reasonable reimbursement to be denied. Otherwise, you get it. So that's a second way of getting money out of S-Corp. The third way to get money out of S-Corp is distribution. And we have S corporation shareholders come back and goes, you know, Ying, I got a Q1 for $200,000. Do you know that I didn't take any of that home? I couldn't because by the time we do taxes, our money is already gone. I already spent it inside of the company. You can't make me pay that. That's not fair. I didn't take it. So people get confused between the concept of distribution versus draws. Okay. As an S corporation shareholder and owner, it doesn't matter you draw the money or not. The distribution is what you pay tax for. That means if you made $100,000 net profit and you're the 100% shareholder, you will pay taxes on $100,000. You argue with me saying, well, look, I didn't take it. The only money I take it was $20,000. I should be paying taxes for the $80,000. You are wrong because S corporation is a pass-through entity. Remember, there's no bottom to it. So when you say you made $100,000, even though you didn't take it home, you still pay taxes on it. So that $100,000 gonna arrive on your 1040, and you're gonna put that in Schedule E, and it's going to come out, make you pay income tax. See, make you pay only income tax, not self-employment tax. If I have LLC, let's say I have an LLC and it's a partnership and I'm partnering with you. And we made $200,000 net profit of LLC, and I take 100,000, you take 100,000. We are also on K1, right? Because LLC partnership is also passed through. Okay, now my 100,000, I take it into my 1040. It is not just paying income tax. It is also pays self-employment tax because I worked as a person in LLC and I am actively involved in business. I'm not passive. Okay, so I have to pay self-employment. So with that, you understand that distribution, number one, regardless if you take money or not. Number two, only paying income tax. So that is the distribution. Then you may wonder, no, Ying, what's going to happen to my $80,000? I just took 20. I didn't take that 80. You can take that 80 at any time. You can take it. And if you take that, because you already paid taxes, so it wouldn't be taxable event. Okay, so it is not measured by the moment when you have your taxes made, you took it or not. It's measured by your distribution total. All right. If any of the owner also are employee, they receive a salary from which FICA taxes will be withheld, of course, right? Because if you work for your S corporation, like, I work at a community CPA, and the community CPA will run a W-2 check for me. That's my salary, right? So I already paid FICA taxes on the salary, just like everybody else. So that's what it says. The owner has a reasonable pay, will pay salary, and will pay FICA tax. As corporation owner may be eligible to take qualified business income deduction. This is so good. And a lot of times, actually, most of the review we did, you know how people move their account to our firm. So when we review their prior taxes, I would say that this is one of the areas we review really closely because we find a lot of taxes did not take this deduction. So what this is, let's say the $100,000 we were saying, like I made out of the S corporation, right? It's a distribution. So I moved the 100,000 with a K1 to file taxes on my 1040. And on my 1040, I can deduct 20% of the 100,000. So I really just calculate income tax on 80, not on 100. Okay. There's of course other detailed calculations in that calculation, but this is just a general idea. I want you to know that it's 20%. Most of the S-Corp, most of the small businesses that we deal with qualifies for that. Okay. When your income is higher, they do get eliminated, but small business makes under 300,000 should have those credits. All right. Many S-Corp owners work in the business. Some try to avoid taxes by paying themselves, by paying people by paying their employee as an employee, but not paying themselves, right? The IRS actually watches that really closely. And we have in Iowa, there's a very famous case. Right now it's being referenced everywhere in the tax documentation. One of the CPA firms partner was getting distribution for $250,000 every year, but only paid himself $24,000 on W-2. Of course, the purpose of doing that is to reduce FICA tax, right? The lower taxes you pay, the lower W-2 you pay, the lower taxes you pay on that FICA tax. So the IRS challenged that. They went to the court. So it's actually settled. The IRS, I think, wanted a lot more salary. It was like 100-some thousand a year salary, and it was settled around 60, but it's still more than 24,000. So this is where I say that the reasonable pay is a big deal. And when you have S corporation, I would advise my business owners to really get that reasonable pay nailed down with professionals instead of just, thinking I just don't want to pay more taxes. Let's not do it, because IRS watches that very closely because they don't want you to make money without putting in deposit with Social Security Administration, because Social Security benefit is a safety net for American. If we say that, oh, our country is great, we don't have people so poor that starving to death. If they work a whole life, they're gonna have a decent retirement. That's what Social Security Administration is doing, okay? Which I truly believe that is one of the best programs in the country. I know there's a lot of controversy. People will tell you something like, it will go bankrupt before you retire. Don't trust that. Try not to do that. My way of looking at that is, if there is really a way to go to, if there is really a risk to go bankrupt, and the government will adjust the mortality rate, will make people live longer. I mean, you know, once you adjusting something small in that statistical world, and the math calculation will follow. There are ways the government is going to take care of this. I really don't think that we are deep in the trench enough that to declare these programs going to go bankrupt. No, they may not be really good. They may be able to pay more, but they are still a very secure program for seniors in this country. So for that reason, they want FICA taxes to be reasonable, so everybody contribute to that, so the country can supply to the baby boomers that coming through, right? So these are, you know, it just from big picture standpoint, that is just how I take on to encourage my client to make the maximum contribution to Social Security benefit possible, and before even thinking about doing things that reduce FICA tax. All right, so let's talk about employment tax saving. So this is FICA tax saving. Reasonable pay is really big deal, right? Reasonable pay is not something someone can just tell you that, oh yeah, just divide the profit by 2 and take 50%. That's your reasonable pay. No, you cannot do that. It is really depends on your industry. It really depends on how your business is doing. But one thing for sure, I will tell you that if your S-Corp is running a loss, and you have employees that you are paying, and you also work really hard, but you don't pay yourself because you have a loss, that is a reasonable pay. Because as a shareholder employee, when your company don't have money to pay the employee, you will cut yourself first. So in that case, yes, you don't have W-2, you would have a loss on the K1 that helps you to get more refund back, right? So, but still, when you make profit, there is a reasonable standard to pay for your position. So a lot of times we would look at what industry you are in, and we will look at the most recent tax court cases to make sure we didn't miss anything. And then we will give you a understanding of what is your reasonable pay. And once we give you that, let's say ours walk in and goes, oh, we don't like you, and you got your W-2 too low, but you got that determination from your CPAs, and you can use that to defend yourself, to give your position, so you at least is not maliciously trying to get away from that. You did search, you did go for professional recommendation, you did your research and come up with that number. And your professional recommendation maybe doesn't fit IRS appetite, but IRS not going to be penalizing you because you have relied on the professional advisors. And of course, on IRS website, you're not going to find anything. IRS stopped gathering S corporation information since 2013. Before that, they actually provide some sort of standard about the reasonable pay. You sort of can look at how they do it and then guide yourself. They stopped doing that since 2013. So I think it is kind of up to the professional and you to make a reasonable decision. So now I just want to give you the number. What are we talking about? Why it is such a big deal? It is a big deal. So if I go for 10,000 distribution on your K1, that means this 10,000 will save self-employment tax. But if I do 10,000 on your payroll, I give that to your payroll, so your distribution is 0, and you will pay self-employment tax because you will do FICA tax calculation, right? So that number we are looking at is $1,500 exact. Okay, exact. I did not calculate the state because the state, when you do distribution on the in the state, there is no unemployment benefit. There's no unemployment tax coming in, right? It is just distribution, just gonna pay income tax. But if you do that on the salary, the state side, you have to pay unemployment tax, and that could get expensive too. But I'm just talking about the FICA tax. That's $1,520, folks. So yeah, for it worth of looking into, right? If it is 100,000, is what? Is 15,200. So it is a lot. Not a small amount. That's why it is such a big topic on the in the industry. And how to become an S-Corp. And in this one, I'm using LLC as an example just because you can become an S-Corp from all the other entities, right? You can become S-Corp from LLC, you can become S-Corp from C-Corp, and know that S-Corp is a status you must purposefully elect to be. It's almost like determine what clothes you're gonna dress for the day. It's a purposefully determined. It is not accidentally become. You can say that I accidentally become a corporation because I didn't know the difference and my lawyer just did that. But to become S-Corp, that need to be elected. That need to have extra work to do. Sometimes we see client coming in and it goes, I'm S-Corp, I'm S-Corp. Then we look at the status they have, it's like they're C-Corp. And then we keep on saying, where is the election? And they didn't even know what we were talking about. So sometimes maybe folks just don't know that to become an S-Corp, you need to do extra work. And to dress up like pretty girls, pretty ladies, and you need to dress up the girls' clothes, right? So that's just really what we're saying, that you need to determine to become an S-Corp is not accidental, right? And understand the pros and cons just for the LLC sake. And if you are a C-Corp, you become an S-Corp, that's really an election for a tax treatment. It's like C-Corp, you pay C-Corp tax rate, S-Corp, you pay individual tax rate. So, there is a threshold for which one is better. Before President Biden tax reform, I did a calculation. If you make more than $150,000, to $150,000 net profit, if you do that, and it is better to stay. If you make under that amount, it's better to stay in S-Corp. If you make over that, and there is consideration to become a C-Corp. And that's kind of the threshold. And I used to say 200,000 when the tax rate was different prior to 2018. Then after 2018, we did a calculation that's 150,000. Now, President Biden is going to change C corporation tax rate to 28%. That's what it says on the proposal. And if that becomes the reality, and then the threshold will change again, then I am thinking, and I haven't really done my mathematical work yet, but I'm thinking that's actually it's going to be around 200,000, just because the rate is also in individual tax rate is also going up. So if you are certainly a taxpayer who pays more than $200,000 on you have AGI more than 200,000, and then you need to consider you really need to plan. But if you are if your AGI is over 400,000, folks, you don't even need to plan. You just close your eyes and walk into a community CPA, because you absolutely need to do something different. There's no choice for you. And that is just how the tax reform is going to come through. So that part, the 400,000 threshold, that is set in stone. It for sure will go through, because it has been talked about during his campaign time, and it's really didn't have, I didn't see a lot of rejections on both Congress and Senate. They all seem to be okay with 400,000. So if your AGI is 400,000 and above, and you say that I'm doing everything myself, I don't need a CPA, you're lying to yourself. You need somebody professional to help you. All right. So here is couple of the point I want to go through. Operating flexibility. LLC is really flexible compared to S-Corp. LLC is almost like can manipulate. The word manipulation is kind of negative, but let's say can plan. And you can have your operating agreement to reflect how you want to divide. So the profit can be divided one way, losses can be divided one way, but as corporation, no, profit and loss all divided in the same way by the share percentage. So on the operation side, and less flexible. Members and the shareholders are very different concept, folks. When you talk about members, just like your golf club membership. And you could have individual be a member and some company also be a member for the golf club, right? So when you are members, it doesn't matter. It doesn't matter your entity, right? Whether you're a person or your corporation, you can be a member. But when you're a shareholder, and especially for S corporation, if you want to become an S corporation shareholder, you got to be a person and you got to be a resident in US, you got to be US citizen. S corporation is a USA, is a United States of America's concept, folks. And when you take S corporation to Canada, and they don't care about that word S, they just know you are a corporation. Okay? And I apologize that it's losing an R on there. Become a cop, but S corp. And profit and loss distribution, I kind of mentioned about that. The operating flexibility is tied with the profit and loss distribution. So if you are really needing the flexibility in that, you are looking at an LLC, don't elect that to be a S-Corp. Employment taxes, okay, folks? If you are doing the same business in S-Corp or in LLC would impose self-employment tax. But S-Corp distribution is not taxed on self-employment tax. So we talked about that already. And if you are foreigner, you're not a resident of US, and you can be a member of LLC, but you cannot be a member, a shareholder of S-Corp. Okay, S-Corp can go become a public company, but not LLC. And you may say, well, you are wrong, Ying, and I know there's an LLC when I'm public. That's because they already become a C-Corp. They elected themselves from LLC to C-Corp already. The name is still LLC, but they're actually not an LLC. So LLC, I want you to know that it's not recognized globally. When you take our limited liability company to, say, Vietnam, and they don't recognize that entity, they're gonna be calling it your personal company. If you want that to be globally recognized, you have to be S-Corp or C-Corp, okay? And you will be taxed as a corporation, in the foreign country when you do business. But LLC, and they could tax you on the corporation, then there's no point to be LLC. So LLC, just know that when you're LLC, you're really kind of limited inside of US. S-Corp is a corporation. That's why it is taxed as a corporation in a foreign country. The path to S-Corp, Form 2553. So this is the passport. This is the passport to become a S-Corp. Okay, so obviously we do S-Corp election for folks, and you can absolutely do that yourself and to become an S-Corp. And a couple of things, timeline for filing this form. I know that is your question to me. A new corporation must elect S status no later than 2 months and 15 days after beginning of their first tax year. So let's say if you formed the company and your first day of the tax year is January to December, and you started in January, make sure that you have 2 months and 15 days to get that elected. It's automatic election, means that they don't charge you. You just get it when you file it. For existing corporation with prior year taxes, if you decided, oh yeah, I want to be S corporation from certain days on, and then you file this form, if you miss the 2 months and the 15 days deadline, it will cause your election to be the future January the 1st of next year. So let's say right now we are in September of 2021, and after you do tax planning with our firm with me, and I'm like, why are you still BLC, and why are you still be a C corp? I think you should be a S corp to take advantage of all the deductions and all that. And then I said, let's become a S corp. And if I just file you 2553 normal, and then you're missing 2021 planning, you're going into 2022, become S corp on January 2022. So in this case, what we call that, you need to seek for what we call late election relief. And there are it can be done, and it is just not the regular 2553, but you can do this retroactive election, okay? And then the election includes the to go back to elect January the 1st, 2021, you have to be, I give you the 3 things here, because the 4 things here, because you must qualify for one of those 4s, right? Number 1, you always intended to be S corp. So if you always intended to be S corp, they grant you. And number 2, you have a reasonable cause for not becoming S corp. Maybe, one of the reasonable cause, we know that we have written that for our client, because they formed the S corporation with the attorney, and the attorney never did file the 2553, so that part was never done. But client didn't know, so always think they're S corporation, because they filed their tax return on paper, so they didn't even know. They did not have the status. So those are reasonable cause, and we can state that and get you restated retroactively back. And that retroactive back has a time limit, 3 years and 75 days. So if it is more than 3 years, 75 days, it's going to be called a hard surgery. It is really hard, but I have done that before. And I'll tell you, there's 2 companies in my 20-some years practice. I have done retroactive election for more than 3 years. And believe it or not, it took 6.5 years to get done. One of them took 6.5. The other one actually take close to 8 years. So it is a lot of time. But as long as you stay on it, then the IRS will eventually get to you. They're just that busy, okay? And and also the third reason you can get S corporation elections year late, just like what I was telling you, this client, they're filing on paper S corporation all along. And then when you tell them that, I didn't know I didn't have it, so I've been filing this, that could be a reason to get S corporation restated as well. So that gives you some clues, right, in terms of how to retroactively elect your S status. I want to mention something, and not only everybody wants to elect, S corporation. Sometimes we need to revoke that too. And you already grow out of S corporation, and you're making so much money. Why are you paying 39.5% taxes, right? Just make yourself into a C corp so you can do more things. So there are reasons for people to want revoke. So I want to teach you how to do that right here. So you need to write a statement. There's no more forms for you. So IRS don't have a form. You need to write a love letter to IRS to tell them why you want to revoke. And that first sentence on that letter, you need to say the corporation revokes election made under section 1362A. And it's just like, I know, don't ask me, and that's just what you need to put. That's the first sentence you go. And then you give the rest of it is common sense. You give the name, address, social security of the shareholder, a number of the shares they own, and you tell them that when you got to the shareholder, the S corporation stock, and what is your year end, the name of S corp, EIN number, statement saying that, under the penalty of perjury, and you sign saying that, yes, I want to revoke that, and what date you want that to be revoked, okay? So this is the letter that you would give. But one more thing I want to mention to you is due date of revocation, okay? The due date, if revoking effective the first day of the tax year, the revocation is due by the 16th day of third month of the tax year. Okay, so let me just give you an example. If I want to revoke January 1st, 2021, I want to be this year. I want to make sure that I tax myself as a C-Corp. I don't want to be S-Corp anymore. Okay, then you must send the statement on or before March 15th of 2021. Did you hear that? Did you see? This is, I didn't make this up. This is the IRS thing. Okay, so IRS said that to send a statement on or before. What does that mean? That means on March 14th, and you're supposed to file S corporation tax return, and know that on that due date, you're also going to send a letter in there saying that you want to revoke. And for March 15th for 2020 tax return, you're sending, right? Make sure that before you send the 2020 tax return as corporate return, and then you are writing the statement and send it together with your tax return. And on that statement says that on or before. That just means that it is not that they will approve you on that day. They just want to make sure that the letter goes in already before you file your prior year as corporation tax return. Okay, if revoking effective any day other than the first day of the year. So if you want to revoke that like on the Valentine's Day, okay, and then the revocation must be received by IRS by the requested effective date. That means you must send that statement to IRS on or before that date. Make sense? So then here is the example. S-Corp is on December 31st tax year ending, and the request revocation effective January the 1st. The revocation is due on March 15th. Okay? The S-Corp is on December 31st tax year ending, and the request revocation effective Valentine's Day. Then the revocation is due on Valentine's Day. All right. So, having given you all of these things, okay? So one thing I think you got it. You know that S corporation status is not born to have. You have to get it. You have to elect that. The magic path to go to S corporation is 2553 is the form, okay? And you know that due date and when you should be filing. And if you happen to not like that status, you can revoke it. And those are the things that you need to do. Then, you know, why you want to be S-Corp and why you want to revoke it is really depends on your business need. I would say that there's never a cookie cutter approach. I have never really remembered my clients are, you know, two come in 1 hour, the other come in next hour. I have never experienced someone is exactly the same. You know, there are days that have 9 appointments, okay? So that tells you how different everybody's situation is. And it's worthy of your investment to hire your good CPA and to give you a understanding of what you're up to and if you want to be S corporation. And, you know, whether you're LLC, S Corp, or C Corp, it's like the business life growth path. It's not a cookie cutter. You shouldn't be born just to be S corporation if you don't need to. And in fact, why are you not an LLC? Because it's easier to manage, less of corporation paperwork to do, and the flexibility in the operation. And I would say that if you are a real estate investor and you're invested with another person who has a lot of money and you have a lot of labor, and why are you S corp? It doesn't even make sense. That has to be a LLC. So there are reasons, right, for whatever we do. So I hope that this conversation would just open up your mind, and now you know what S corporation is, and elect the right one for yourself. Okay, and I will end our webinar like this, and I'll see you on Tuesday. I have 30 minutes, and I don't remember my topic today for Tuesday, but Saturday 3 o'clock is always it always me does the research and making sure that we talk about relevant things that related to you on a daily basis as a business owner. And I wish you doing your business well this week. And it is about 10:40 extended due date, right? October 15. And make sure if you're filing S corporation tax return, you should have already got that done. You already got hold of your K1. And in our firm, we never do your S corp filing before we do your 1040. it is always filed together, because we don't believe to file your business not consider what you have on your 1040. Sometimes we think the S-Corp look great, you know, it has a loss. No way you're gonna have no way you're not gonna get a refund back. But that's not true. If that loss didn't have a basis documented inside of that K1, even if it has $1 million loss, you got the K1 and you cannot deduct. And sometimes you were paid, you got a profit from S-Corp. You think you're only paying $100,000 on profit, but also you are paying $100,000 on capital gain. Why? Because you over distributed. So those are the things we actively looking to make sure that you are really doing the right thing. Don't get fooled by K1. K1 is a very complex thing, has a lot implementation in the background. You don't really know. And looking at K1 tells you nothing. Cannot say whether that is what taxes you pay. That would be irresponsible. So giving you that insight and to encourage you, engage professional CPA firm to work on your taxes, especially if you are involved with S corporation and distribution, capital gain, and distribution losses and stuff like that. And do your business wise. Okay, and I will talk to you again. Bye bye.